What does that mean, Joe, when you say interact? Does that mean enter right here? No, because price actually closed a little bit below it. I'm looking for price to interact with it and then respect it, touch it, and then close back above. Hey there, welcome back. It's Flexing Joe, and today I want to discuss my trading strategy and the mechanics of it, if it is quote unquote purely mechanical, how I trade it, and how it worked out this week on MES. So let's get into it. Now, let me quickly go over the basics of this strategy. The first thing you're going to do every day is wait for the first 30-minute candle to print. So this is your first 30-minute candle. This candle on TradingView is marked at 9:30 a.m. It's the 9:30 candle because that's when the time of that candle starts, which means after 30 minutes, it's now 10 a.m. So that is your opening range from wick to wick, top to bottom. This is your opening range. The next thing you're going to do is be on the 10-minute time frame. And you're waiting for a 10-minute candle to close outside of this range. Even though you had a sharp move down, it didn't close below, so there is no short trade to be taken here. You have a 10-minute candle that closes outside of the opening range here. So this is your trigger to drop to the 2-minute time frame. So what I'm going to do is rewind here, and I'm going to show you 10-minute candle closes outside, drop to the 2-minute time frame. Here's your 2-minute 20 EMA. I get a lot of questions about the EMA settings. When you go into the indicators and search for it, it's called moving average exponential. And then they call it EMA. It would just be simpler if it was EMA, but it's not. So anyways, length on 20, source on close, no offset, no smoothing. Just leave it be, okay? That's this EMA setting here. Now we're going to wait for price to interact with it. What does that mean, Joe, when you say interact? Does that mean enter right here? No, because price actually closed a little bit below it. I'm looking for price to interact with it and then respect it, touch it, and then close back above. Once it closes back above, I'm going to take my entry there when that candle closes. Once that candle closes, I will be targeting the high of day. Here in this instance, I'm targeting the high of day, and I'm going to put my stop below the low of the candle that broke through the orb high. In this case, this is the low of that candle. See, this is a 10-20 candle. This 10-20 2-minute candle means that it's the start of the 10-minute candle. So my stop is just a couple of ticks below that. Okay. This is a trade that I took live yesterday in the community. I called it out as it was setting up. When we broke through the orb high, I said, hey, we've broken through the high of day here now. Now that I've seen this candle break out, I'm going to be looking for a 2-minute 20 EMA interaction. I set alerts. I had my alert set a little bit above so that when it came back down, I was alerted beforehand. We caught the trade, and obviously, it worked out pretty well. There was minimal drawdown before the target was hit. I think, it really went down to here. It was about 4.5 points of drawdown. But ultimately, it did achieve a RR of greater than 1.75 to 1. You earned 12 points, risking 7. Okay? And that trade worked out. Now, I want to just quickly call your attention back down to here, where there was not a 10-minute candle that closed on outside of the low of the range. Again, I'm going to go back to your 10-minute chart. I want to show you. Because there was no 10-minute candle that closed below here, then there is no trade, right? The signals have to work in order. So one question that I get frequently is this system mechanical? Now, people have a different definition of what mechanical really is. They think mechanical as in I can program it into a bot. If that's your definition of it, then yes, you have a defined place to put your stop, right? And a reason for that. You have a defined way of where to take your entry, and you have a defined place of taking profit. And what you do with your take profit up here is solely up to you. Now, what I did yesterday was I scaled out 8 of the 10 micros that I had. I bought 10. I had the stop here for the full 10, the target here for 8 of them. When this target was hit, I took profit on 8 of them. My stop was moved above break even, and I held on to 2 of them. I had my next target set for 25 points, but it just barely missed it. And ultimately, I moved I trailed my stop up. I moved my stop up. I had my stop here. It almost got hit there. Tried to push up again, and then my stop was taken. Right. So I did get about 5 or so points on the candles I stopped. On the 2 contracts I stopped out on, and I got the target here. Sometimes you'll get more, and sometimes you won't. Now, Even that, people will say, well, you trail your stop, based off of something on the chart or the pivots or what have you. Well, it's still a 10-minute candle low here, right? So I moved it up following the 10-minute candle lows. And every time that you trail your stop is going to be different. The price action will move differently, and sometimes a 10-minute candle low will work, and sometimes it won't. And that's what happens when you trail stops. But if you wanted to take all profit here exclusively and have this be completely mechanical, you could. But then on days like we had, and I'm going to go back and show you, where price continued to move really crazy in your favor, you potentially can miss out on some profits there too. So let's go back and look at another day. I trade live every day in the Discord, and I called out these trades when I took them, including the one where I said I was managing the trade. I took 25 points in profit, trailed the stop up, and was all out for 50 points. If you want to trade live with me, there's a link in the description box down below, and you can see me execute this process in real time. All right, here we are on Thursday. First 30-minute candle, right? 10, 20, 30 minutes. Again, look at the 30-minute candle. There's your opening range. Drop down to the 10-minute time frame. Wait for a 10-minute candle to close outside that range. Now, you had a 10-minute candle close outside of this range here, right? Let me just rewind. Two things there. It's a pretty weak close, pretty shallow. And then, again, this is a discretionary thing. When you're looking at it, we've already broken over the pre-market high. So we've broken the high of the London session. But it's okay, because watch what happens on the 2-minute chart. If you have the candle that breaks outside and you drop to the 2-minute time frame, see, the final step doesn't trigger your entry, because you're not waiting just for a 2-minute 20 EMA interaction. You're waiting for it to touch but close above. And it didn't do that. So there is no long entry to be had there. This is where, again, the question is it mechanical? Mechanical rule set. Now, let's go back to the 10-minute chart, and we're going to watch to see if a 10-minute candle closes outside of the orb low. So there's a 10-minute candle closing outside the orb low. Drop to the 2-minute time frame. You have two candles that have closed outside the orb low now. You do get triggered on a trade right here. And this was either a loss or a win, depending on how you handled it. If you look at the candle that first breaks through the orb low and you put your stop above that candle, your stop is technically up here for 17 points while you're targeting 7.25. I personally don't like that. I think that stop is a little bit too wide, and it's a recipe for disaster. Many people essentially got stopped about around here because they said, all right, well, I'll do 1-to-1. I probably would have gotten stopped out around here too, unless I give a little bit more. But even then, that's kind of pushing it. I have seen in the back testing that a negative RR still works, and you are long-term very profitable. It doesn't need to be one. But if you went with a purely mechanical stop, you did not get stopped. One thing to consider when you take a position like this is that this is a very explosive candle that's moving up here. And whether there's a lot of volume on that or not, or you have a level there or not, it's important to recognize, hey, this one candle engulfed 1, 2, 3, 4, 5, 6, 7 candles that preceded it. In 2 minutes, we have now erased 14 minutes of moving down. That's enough to give me pause and say, I want to wait a second. If the next candle closes below, then I'll take the trade. But it didn't. So I didn't take this trade. That's where I read it from a discretionary basis. But if you just use the mechanical rule set, it won. So that's where, using the mechanical rule set, you'll have to understand what your potential loss is here, and you may need to change your sizing. But if you use the same mechanical sizing, you won. So you get 7.25 points in profit if you trailed the entire position, or what have you. If you took off the entire position, but if you took off the majority of it and trailed a few, let's see how that continues to play out. Stop would be about break even. You do get another trigger there where it touches. However, if you waited for that candle to close after it touched, you see that the entry is so close to the pivot low there, it's not worth taking that trade. And you could mechanically eliminate those by saying, the minimum profit on ES needs to be at least 4 points or 5 points or what have you, and that wouldn't qualify on that trade. Another interaction there, another interaction there. You see they are still closing below. Now they close back above. Again, at a break-even stop, you're still in this trade. Now you're out. So it did move a little bit lower. And when it broke down lower and then still closed back above these lower wicks, usually that is a red flag. And you're going to learn that through more time spent watching the market, price action analysis, etc., and reading price action over years of screen time. Let's look at another day. Here we are on Wednesday, August 5th. This is your first 30-minute candle. Mark the opening range. Drop to the 10-minute time frame. And we can also just use the Vulcan key levels, right? Again, this indicator can be in the description box for you below. You're on the 10-minute time frame. Wait for a 10-minute candle to close outside of this range. There you go. 10-minute candles close outside of it. There's a start of a new candle. Drop to the 2-minute time frame. Wait for a 2-minute 20 EMA interaction. There you have it. Sorry, you had it. Hold on. You had it right here. Right here. It was there. Let me go back. Boom, it touched. It did touch. So that candle closes. The next candle opens. Next candle opens on the open of the next candle or the close of this. Once you realize this touch and you're getting, you can, however you want to do it. Your target goes to low of day. Your stop can go again. You can put it above the high of the candle that broke through the orb low. This was the 1030 candle that broke and closed lower. The high of this candle is here. That makes this RR greater than a 2. This is an example. It's going to be an example to understand. I took this trade live in the Discord. I called this one out. And I had this entry, did exactly this, right? Took my profit here on the majority of the position. I had 2 contracts left. When we re-broke the low of day over here, we made this low, and then we broke it again. I scaled when we re-broke that low, knowing that we were potentially going to go a little bit further. And then ultimately, I took profit on the runner contract at 41 points, which is right here. So let's call that out. Let's understand that 41 points in profit on one contract, right? And I had 8 contracts here that I took off for nearly 10 points. So I captured 8. We'll do it just round numbers. 8 times 10 is 80 points. This one runner also yielded me 40 points. So it enhances the risk reward on the overall trade on this one contract, getting better than an 8. And it enhances the RR on the overall trade. Okay. So again, very mechanical, very systematic. Let's look again at another day. Here we are on Tuesday. Here's your first 30-minute candle of the day. There's your first 30-minute candle opening range. Drop to the 10-minute time frame. Wait for a 10-minute candle to close outside that range. The 10-minute candle closed outside of that range, right? Let's go to the 2-minute time frame. Not the 1 minute. Sorry, the 2-minute. We're on the 2-minute. Wait for a 2-minute 20 EMA interaction. Boom. You got it right there. See the 2-minute 20 EMA interaction? It tapped it and it closed back above. So long entry there at the open of the next candle. Now, if you wanted to, you can put your stop below here and your target up there. It's just barely under 1-to-1. The win rate is high enough to sustain trades that have a negative RR. Your TP is hit. So if you took profit on the majority of the position there, let's go ahead and we'll just continue to let this play out until we get to about the end of the day. That's a pretty insane move for ES, isn't it? All right. So we've passed the closing bell here. Let's see. Here's the closing bell. Now, how you could have trailed this is totally on you. Everybody's going to do something a little bit different. But once we made this one big leg up here with multiple candles, this starts to look like some buyer climax. And we're reaching the end of this move. And it was nearly the end of this move. So I would think that having the stop here is pretty valid. He starts to chop, it does this. Again, it moves into the highs here. And maybe, I would move the stop even a little bit more to about here. And then you would see that the stop gets taken. Or when we break a new high of day there, if you continue to hold through this whole thing, nonchalant, maybe you get about 77 points. So what I'm trying to say is, with trailing for a runner, you actually were able to get 7 times the profit you did on the initial scale out. So like if you took some off at, you took one off at like 28 and you took one more off there, you got 77, or sorry, I don't know why I said 28. I'm sorry. I meant 25. Like if you just were like, oh, I'm going to take one off at 25 or 30 or what have you. This was a tremendous winning trade and you were able to capitalize on a huge trend in a mechanical fashion. So you could do this any way you wanted, or if you just wanted to have the mechanics of it be, hey, I'm going to take the majority off at the pivot break, and then I will just trail the rest and look at the chart, look at levels or what have you, and scale out from there. That's totally fine. But this is all-time highs. When we're in an all-time high break, all-time highs, clear skies. So what's the rush to just take profit? One thing to consider, right? Let's go back and look at Monday. Here we are on Monday. 9:30 a.m. candle, first 30-minute candles, your opening range. See that on the 10-minute? That's your first 3 candles on the 10-minute chart. Let's go ahead and let this play out. Wait for a 10-minute candle to close outside of the opening range. All right, we've had a 10-minute candle close outside the opening range right here. Everybody sees the mechanics of it. Let's drop to the 2-minute time frame. Wait for a 2-minute 20 EMA interaction. Now, you have it here, okay? Now, I know that one thing to strongly consider here is that you have broken out of the orb high. You're very, very bullish. And this is following a gap up from Friday's closing price, right? You can see there was actually an overnight gap up, which was huge from Friday in the afternoon to Sunday. They try to move lower and fail. Higher low made here. They actually move down lower. They break underneath this level here and they rocket away from it. So this is a failed breakdown. Nothing is more bullish than a failed breakdown. Nothing more is more bearish than a failed breakout, right? Those are the common trading sayings. I didn't make the rules. I just try to play by them. So in this scenario, when you have the EMA that gets touched, right? You have the EMA gets touched, it closes here. So if you wanted to take the entry in here, you have to look at like, hey, I'm only looking at a 3.5 point target. That is quite low. To put the stop below the low of the candle that breaks out of the orb high is all the way, or even at it, is down here 15.5 points. Like this is a really, really low RR trade. So in my experience, you should probably tighten it up, right? You should put it somewhere that makes sense. And this is the one time in the week where it's like, what's this really look like? Now, if you just didn't like it because you said, hey, it tapped here, but it closed so much higher, you know, again, if you're going to be strictly mechanical, this is where you enter and that is where your stop goes and that's where your target goes. It doesn't really matter. But if you didn't like it or you wanted to have a limit set, you know, of, again, because that would have been what? Only a 0.23 trade. That's really, really low. That's like your sizing needs to be adjusted, or, you know, a couple losses like that are gonna suck relative to the target, but it doesn't matter when it wins. And I'm not saying every time you're going to win, but what I am saying is if you want it to be strictly mechanical, you can be. If you want it to be mechanical and alter the rules of the mechanics a little bit and say, I'm going to make sure that I have at least a 0.5 R trade, your stop is still a ways away and it gives you a good amount of drawdown relative to the target. Now, if you scaled out the majority of your position here, relative, you know, realizing, hey, I entered in relatively close to the pivot break, you scale out the majority of the position again, 80% or so. If you moved your stop to break even, you got tagged out. Now, if you moved your stop to break even, you got tagged out, like that's totally fine. But then on the next candle, it validates, hey, this is still a potentially good trading setup. And in the other examples too, there were situations where if it tapped the 2-minute 20, you can look at it as, did we have a gentle pullback? Are we still really bullish? What's the market doing overall? And in my mechanics of the system, do you want to take the second or the third opportunity? Here's a second opportunity where it closes above. I would put my stop below the most recent 10-minute candle low pivot where buyers held here and were able to push to a new high. This should be what's called a protected low or a strong low. Why is it a strong low? Because it made a new high, and then the target would go here. You're about 1-to-1. You scale off the majority of the position again. Stop goes to break even on the remainder, because why should you let a green trade go red? Okay, and then you just let this continue to play out. Now let's go ahead and let it play out. Again, utilizing a break-even stop. They push up here. Maybe you move your stop to here. They push up again to here. Maybe you move your stop to here, etc. Now you're over 30 points. Oh, I'm sorry, we went past the close. So I think the point that, so to wrap this up, I think the point that I've made here is that you can be very mechanical about it. You can be absolutely mechanical about it if you choose to be. If you want to use a little bit of discretion and read the market, have a little bit of market analysis and decide whether or not you're going to keep runners or whether or not you're going to take the trade at all, because if something just doesn't seem right, that's still on you, because ultimately it's your money and your capital that you're deploying. But if you were strictly mechanical, like strictly mechanical this week, right, and you took only the first entry, you had a 100% win rate for the week. You were very profitable. If you took the second entry here, and for example, you were also even more profitable. If you let runners run, you were overall more profitable. So it's up to each person as an individual to read the market and trade it. Now, I took these trades this week. On 2 of them, I let runners run. One of them was the low, the short to the lows, where I took 41 points in profit. The other one was on Tuesday, where we had the big run up, and I let this trade run, and I took 50 points in profit. I was all out for 50 points. So I had 2 big winners because I let runners run this week. Again, not necessary. If you want to be purely mechanical and you want to program it into a bot, you can do that, but maybe you're going to miss out on something if you're not there to actively manage it. So I hope you enjoyed this video and that it provided some clarification. I hope you enjoyed the trading examples that I was able to provide. If you have any questions or comments, please hit me up in the comment section down below, and I look forward to seeing you in the next one. Thanks for watching.